Hi again. It's me, DVO, Derek Van Otten, and I'm bringing you another episode of the Peak Signing Agents podcast, where I'm helping you become the best signing agent and notary that you can be. Thank you for tuning in, whether you're watching on YouTube or listening on podcasts. I am on both locations. If you're subscribed on one, hey, if you don't mind going back to the other, also subscribe. So if you watch on YouTube, if you don't mind going to podcast platforms and subscribing there, and if you listen to podcasts, if you don't mind going to YouTube and subscribing there, I would appreciate it, especially if you are getting value from this. The best way you can show your appreciation to me is by subscribing everywhere and by sharing with others, other notaries and signing agents. Well, this episode, I'm sharing with you what I feel to be some great information, okay? Because I know a lot of notaries and signing agents struggle filling out this particular form. And I just wanted to help you understand it better so you can go through it. It can take a lot of time because the form we're talking about is a tax relatable form, and notaries or signing agents and sellers don't really know how to fill out this form properly. So I want to share with you how I explain the form, how I help them fill out the form so this doesn't take a very long time. The form we're talking about is called, I'm going to look at my notes here, the Certification for No Information Reporting on the Sale or Exchange of a Principal Residence, also known as the True or False Questions when selling a property. This is how I always refer to it, as the true or false questions. Right? Because every seller packet, nearly every seller packet, should have this form in there. Because this gets reported to the IRS. Now, is this an IRS form? Yes and no. No, it's not made by the IRS. It's made by the title company for the title company, but they do report it to the IRS. And these are the true or false questions. And we're going to go over these questions exactly, okay? I'm going to explain to you how I do it. Now, disclaimer, couple quick disclaimers. Number one, I am not a tax professional. I am not a CPA. Always seek advice from a tax professional or CPA about these type of questions when it comes to real estate, because these are a taxable event when selling a home, a possible taxable event, I should say. Second disclaimer is we as notaries cannot give tax advice. Also, title companies, escrow companies cannot give tax advice. So there is really no point in calling the title company to help ask questions or answer these questions. They will not answer the questions for you because, again, they cannot give tax advice. If you try calling a title company, they're going to say, well, this is what it's saying. And you're just going to mark true or false. I really can't tell you the answer. I've told sellers this. They still want to call the title company, and the title company tells them exactly what I said. They cannot give them the answers. We as notaries cannot give these answers. We are not providing tax advice. However, I do explain these in a way that is much more understandable. I had an escrow officer actually who helped me with this, because she was explaining to me that when I give this form, because, we can't give tax advice, I'm like, okay, you're going to answer these questions and you're just going to mark true or false. And the real estate agent might be there and they're like, this is taking a very long time. Like, can you do this, escrow officer? Because when the notary's there, it just takes a long time, and you kind of help walk them through that. So my escrow officer told me, she goes, Derek, I don't give them the answers, but I fill this out for them. And I said, oh, please do tell. And she said, I'm asking them the questions and I'm marking the answers based on their answers. I said, oh, I see. So you're not giving them the answers. You're rephrasing it so that they can understand better. They're answering you and you are marking which is the correct answer based off of what these sellers are telling you. I mean, that makes sense. So let's get into it, shall we? All right. So again, this is the Certification for No Information Reporting on the Sale or Exchange of a Principal Residence. It does say on a principal residence because the tax exclusions do count towards principal residence. But there is a question in here, and even if it's an investment property, it could be relatable. That's why we're talking about it, and that's why sometimes it's even in investment properties. Okay, let's get into it. So the first part of the form has three questions usually, okay? It's going to be number one, the name of the person or entity, if it's an LLC or a trust. Number 2 is going to be the address of the property. And number 3 is going to be the social security number or EIN number of the entity. A lot of times these are not filled in. You, the notary, should have the people fill it in. Usually number 1 and 2 are filled in. It's going to be the name of the seller and the property address. Usually that's filled in. But the social security number or EIN number, let's just call it the tax identification number. All right, here's another thing. A lot of people get confused when they see the words tax identification number. And they say, is that their social security number? A tax identification number is a number given by the government, the IRS, whatever. And it's either going to be a social security number or an employee identification number, EIN number. These are tax identification numbers, TIN. So I'm going to refer to these as TINs, okay? Because tax identification numbers are a number given by the IRS, which will either be a social security number or an employee identification number, EIN or SSN. I'm going to call these TINs, okay? Tax identification number. The tax identification number is usually not filled in, and a lot of notaries, I'm speaking as a signing service owner, a lot of notaries do not fill these in. This must be filled in. If they say, I don't know, let's just say it's under trust, and they say, I don't know if it's under an EIN number or an SSN number, I just say, well, what do you remember? Do you have your forms? We have to fill it. You cannot turn it in blank. If they're really struggling, I'd say, okay, we can leave this blank. I'm going to let the title company know that you will call back later today with the answer, okay? Here's your copy. Here's the settlement statement. Here's the title company's name. Here's your escrow officer's name. Here's their phone number. Call them today and give them the answer. It's either going to be you either set up the trust with an EIN number or you use your SSN, social security number. Call them back. But it must be filled in. It must be filled in. It gets reported to the IRS, like I said. You can't be left blank. These true or false questions cannot be left blank. I don't know how many notaries will just send me scans and it's just blank. They're like, they don't know how to answer this. It doesn't matter. They have to answer this, okay? As a signing agent and you're doing a seller packets are beautiful. They're usually a lot less pages. It's much more simpler than a purchase or refi or VA or FHA or reverse mortgage. Seller packets are much simpler. It needs to be filled in. You need to take the time to fill this in. And I hope this episode will help you how to fill this in. Now, these questions most likely are always going to be the same questions, okay? Let's read through these questions. These are true or false. This is how I state the documents. I say, okay, now we're going to get into some questions here. These questions are for the IRS. They're looking to see if this is going to be charged capital gains taxes on the sale. Anytime you sell a property, whether it's excluded from taxes or not, will be issued a 1099-S. 1099 is the IRS code of you are getting income. How are you getting income? Well, that's what the dash and a couple letters means. You, as signing agents, you are independent contractors. You are self-employed business owners. When a company, let's just say me, I'm a signing service owner. When a notary has done work with me and they've made over $600 a year, it is mandatory to send them a 1099, which means I have paid them income, and it's called a 1099 miscellaneous, MISC, miscellaneous. Let's just say from your bank, you got a lot of interest earned from an investment account or from your savings account. You'll get a 1099. You've got free money, which is interest, and that's the code INT. Well, when someone's selling a property, it's going to be 1099-S, S for sale. Okay? I know it's not really needed in our line of work to know these things, but I think it's just important as business owners to know these type of things. That's just me. So just read these questions, all right? Because anytime a sale of a home is being completed, there will be a 1099-S submitted to the IRS on behalf of the seller. And how these questions are answered and how the CPA files taxes depends on capital gains taxes. Okay, true or false? So this is what I say. I'm like, we're going to answer these questions, true or false. I'll help you. I can't give you the answers because me and the title company are not allowed to give tax advice, but I'll help you understand them because read them carefully. There are double negatives. So double negatives really throws things off for people, understandably, especially if you're a new notary or signing agent. This can really throw you for a loop. Now, me, personally, I've done thousands of these, so I'm very familiar with it. And guess what? You will too in one day. All right, number 1, it says, I'm gonna read the whole question, and I'm gonna tell you how I explain it, okay? I owned and used the residence as my principal residence for periods aggregating 2 years or more during the 5-year period ending on the date of the sale or exchange of the residence. So how I say it is, all right, what the question is asking you is saying you owned the property and used the property as your principal residence for 2 out of the last 5 years. Is that true or false? That it was your principal residence for 2 out of the last 5 years? And they're going to say true or false. Has to be 2 years. It does not have to be consecutive, by the way. It does not have to be consecutive. Let's say they bought the house in 2020. They lived in it in 2021. They rented it in 2020. Sorry, they bought it in 2020. They owned it and they lived in it for the year of 2020. In 2021, maybe they started renting it out. And in 2022, they were renting it out. The sellers or the renters moved, and so they moved back in, the owners. And then for 2023, they lived in it. And 2024, they rented it again. Well, out of 5 years, 2 of those years, they lived in it. So this would be true. Let's just say they only owned it for 1 year and 3 months. Well, they have to live in it at least 2 years for the exclusion. Okay. Now, again, if you have questions, ask a tax professional or CPA. But if they lived in it, and it has to be 2 years. They have to have lived in it at least 2 years out of 5 years. Okay. Number 2 says, I have not sold or exchanged another principal residence during the 2-year period ending on the date or sale of the residence. The first few words are, I have not sold. This is going to be a possible double negative. So I just say, okay, number 2, this is going to be a double negative. Read it carefully. I have not sold or changed. So my question to you, sellers, is it true that you have not sold or exchanged another principal residence? Principal meaning you lived in it in the last 2 years. Is that a true statement that you have not sold? Or is that false? You have sold. See how I'm phrasing it? I'm not giving them the answers. I'm just phrasing it so they understand it better, so that we can keep on moving, so they're not sitting there staring at me. It also shows that I know what I'm talking about. It shows that I'm a competent notary signing agent. All right, number 3, I, and then in parentheses, or my spouse or former spouse, if I was married at any time during the period after May 6, 1997 and ending today, end parentheses, have not used any portion of their residence for business or rental after May 1997. So I'd say again, okay, this is going to be a double negative. And I'm going to rephrase this, but I'm going to exclude those parentheses because I can see if they're married or not. And I'll just say, I have not used any portion for residence of the residence for business or rental. Is that true that you have not used it for rental? Okay. Is that true that you have not used it for rental? Or is that false? You did use it for rental. See, I'm just rephrasing it easier for them to understand it because it's difficult. All right, number 4. It says at least one of the following 3 statements applies. There's going to be 3 statements. And just one of those. Now, I can help them because I can look at the settlement statement. I can see what the sale price is. I can see what their net proceeds are. But let's explain this. So, at least one of the following 3 statements applies. Either the sale or exchange is of the entire residence for $250,000 or less. All right, was the sale for $250,000 or less? Was this? I mean, if you can look at the sale price and it's $120,000, well, number 1's already true right off the bat. Okay, all right, I mean that helps you right there. Or I am married. The sale or exchange is of the entire residence for $500,000 or less, and the gain of the entire residence is $250,000 or less. Or number 3 option, I am married. The sale or exchange is of the entire residence for $500,000 or less, $500,000 or less, and I intend to file a joint return for the year of this sale of exchange. And my spouse also uses residence as his or her principal residence for periods aggregating 2 years or more during the 5-year period ending on the date of the sale or the exchange of the residence. And C, my spouse also has not sold or exchanged another principal residence for the last 2 years. All right. Let me read to you from the IRS website, irs.gov. This is from their website. This is on the sale of the home. This is what it says exactly on the IRS website. If you have a capital gain from the sale of your main home, you may qualify to exclude up to $250,000 of that gain from your income, or up to $500,000 of that gain if you file a joint return with your spouse. Now, I asked them, are you currently married? Were you married at the time? Because at least one of them has to have used it as their principal residence for this, and they had to have lived in it for 2 years or more. But basically saying if they are a single person, the exclusion is they will exclude up to $250,000. Okay, first of all, let's talk about if they were a single person. Because if they are a single person, then the other two don't apply, because the other two say I am married, and then ... The other one says I am married ... So if they are single, you just go to that first question. Okay. The sale or exchange. So basically, I'm saying from the time you bought it and all the upgrades you put into it. Upgrades. Okay, we're not talking about you're paying landscapers. We're not talking about the what's it called? House cleaner, whoever cleans your house, right? If you pay for a house cleaning service, that does not count. These are investments. These are upgrades. Okay. Did you remodel the kitchen? Did you add new paint? Did you fix the roof? These are upgrades, things that add value. Okay. From the moment you bought it, and then all the closing costs and fees, plus all the upgrades you did, and then now we're doing the sale. Okay. Did you make more or less than $250,000 as a single person? That's how I phrase it. From the moment you bought it and then all that you put into it, is that more or less? It has nothing to do with the value. It has nothing to do with what it's appreciated. It has nothing to do with that. It's basically saying what you bought it for, how much did you invest into your property to make upgrades, now minus the sale of the price, and closing cost fees as well from buying it. Did you make more or less than $250,000 if you are single, or $500,000 if you are married, filing jointly? That's how I phrase it. And if your net is $250,000 or less single, or $500,000 or less married, then the answer is true. Okay, that's how I do it. All right, the next question number 5, is during the 5-year period ending on the date of the sale or exchange of the residence, I did not acquire the residence in exchange to which Section 1031 of the Internal Revenue Code applied. So I just say, when you bought this house that you're selling, because sometimes when I say when you bought this house, they're thinking the house that we're signing in, maybe where they're living in. I say the house that you're selling, when you bought it, did you buy it through a 1031 exchange? And then I say you would know if you did, because there's a lot of extra paperwork, and there's an exchange company. They would know. It's a 1031 is a strategy, all right? They would know if they were doing 1031. So I say, did you buy it doing 1031? And if they ask, like, what is a 1031? I say, well, what happens is that means you sold before you bought this house that you're selling, you sold another house, and instead of paying capital gains, you rolled that right into this. You worked with an exchange company, you filled out 1031 forms, and you rolled it right into this house that you're selling to buy it. Did you do that? They're like, no, we didn't do that. I say, yeah, you would know if you did. And it goes a tax strategy that a lot of people do. Usually investors or flippers, it's a tax strategy they use. But if you just bought this house, you just got a traditional, conventional loan, then no, you didn't do that. So this is a double negative. So I go, this is double negative. So read it carefully. It says, I did not acquire the residence in 1031. So is that true that you did not do a 1031? And they say, yes, that is true. See how I'm kind of helping phrase that for them. All right. Then there's another question. This is not always there, okay? I am going to read this because it is there sometimes. But this question I'm going to read right now is sometimes not there. But it says, there has been no period of non-qualified use as that term is defined in Section 121 after December 31st, 2008, and as required by Section 605. Okay, all right, this is Section 121 of the IRS Code. And this is talking about non-qualified use. So basically, use is you lived in the property 2 out of 5 years, and you were using it as your principal residence for a consecutive time. I believe it's 2 years. You lived in it consecutively for 2 years. All right, that's what that is asking. And then the last question, but this actually goes back to the 1031. But it says, if my basis in the residence is determined by reference of the basis in the hands of a person who acquired the residence in an exchange to which Section 1031 of the Internal Revenue Code applied, the exchange to which Section 1031 applied occurred more than 5 years prior to the date I sold or exchanged the residence. This question only applies if they did acquire it through a 1031. So remember that question we asked when I say, did you acquire it? Well, true or false? I did not. Is it true that you did not acquire it through a 1031? If they're like, that's true, we did not get a 1031, then this question is not applicable. This question usually has a true, false, or NA not applicable. So it's not applicable. If they did buy it through a 1031, then they will answer true or false. It's basically asking what their basis. The basis is what you bought it for. That's the basis, okay, to help you with that. All right, so it's just asking based on the basis of what you bought it for. It happened more than 5 years. Okay, so they'll just answer true or false. And then they sign and date it. Okay? I hope that helps. Get a seller packet and re-listen or re-watch this with the paper forms with you. I think it'll be a lot more helpful because maybe you're listening to this or watching this from bed or you're driving. And so maybe you haven't done a lot. So, but if you've done quite a few, you'll know exactly what I'm talking about. But this is how I question. If you haven't done a lot of these, get a seller packet, look over these questions, or you can probably even Google this page. Again, this is called the Certification for No Information Reporting on the Sale or Exchange of a Principal Residence. I will put that in the show notes for this episode. And you can probably Google and find a blank form and just follow along. But I do think this will help you answer these questions so it moves along, so you're not just like, you're not just with the seller saying, okay, we'll just fill these out, I can't give you tax advice, good luck, I hope it makes sense, there's some double negatives, watch out for those, read them carefully. This is how I phrase it, and I help them answer these questions. I don't give them the answers. I'm not telling them what it should be, because some people say, well, is this supposed to be all marked true? I was like, no, it's whatever the answers are. No. And just know this. It will always trigger a 1099-S to be sent to you. You just give that to your tax professional and just explain to them that you bought a house, or I'm sorry, you sold a house, and you just give that to your tax professional. They'll kind of help you figure it out if there's capital gains tax or not. All right? So I hope this helps you. If it does help you, again, please subscribe on YouTube and both on podcast platforms. Share with anyone that you might see they had questioned this, maybe in a Facebook group or in a forum of a notary forum. There's like, hey, has anyone done seller packet? How do you answer these questions? Please, if you don't mind tagging the link to this video or podcast episode, maybe mentioning the episode number, I'd appreciate that. I want to help our notary community. I want to help all notaries do a proper execution of these. I want you to be marked preferred with title companies. I want you to be marked preferred with signing service owners. Okay? I want you to get the most jobs. I want you to be competent. I want you to be comfortable doing these. I want you to be a peak signing agent like you are meant to be. And I'll talk to you on the next episode. Thanks for watching or listening. Bye.